If there's one city which has managed to stay resilient through all the upheavals that India's real estate sector has gone through, it's undoubtedly Bangalore. Rated as the world's most dynamic city amongst 131 major business hubs globally. You heard me right. It's 131 major business hubs globally. Bangalore has stood ground on its residential portfolio and managed to beat almost every other Indian city when it comes to commercial, retail and hospitality real estate. Today on The Real Deal, we decode this realty market to get a glimpse of what works for India's Silicon Valley and how do you take the right bets with this city. Joining me on the show today are the city's heavyweights, 4 listed companies and some of the best-known names who have put the city on the global map. Irfan Razak, Chairman and MD of Prestige Group, M.R. Shankar, CMD Brigade Group, J.C. Sharma, VC and MD Shobha Developers, and Ashish Purvankra, MD Purvankra, who's of course taking our age down by about a decade, if not more. Thank you, gentlemen.
Sorry, not the average, he can't take it down by a decade.
Not average, right?
Years.
A few years. Okay, anyway, gentlemen, thank you very much for joining me on the show today. So I'm just looking at the numbers. So together, 4 of you have delivered 300 million square feet. 150 is under construction right now. That's 450 million square feet on the table today. Wow, the big number. Let me start, though, with the toughest of questions. Mr. Razak, has the residential market come back to its peak, or is it still much below that? Even though the numbers now that I have of supply versus absorption are looking very good, supply much lower than absorption.
Anisha, the business is just growing. If you see quarterly results, we've reported 75% growth in sales from the last quarter. And I think this quarter it's some 1157
Quarter on quarter, I do not absolutely challenge any of those numbers. They are very, very good numbers. In fact, they've been delightful.
Yeah, but then you see, there is a certain amount of business that can happen. There's a certain amount of activity that can happen. And I believe there's also what generally you say, you know, there's a holding capacity of anything. So here I believe there is that capacity is growing, expanding, and it's going on. Okay, there could be some mismatch. Sometimes you'll have little excess supply, sometimes you'll have a little shortage. But now it's a good time for the buyers, because when the supply is slightly outstripping the demand in terms of the number of units being sold. So the choice is there for the buyer. And what is also happening in that context is even the price is getting, on the same thing, it says getting sustained. You don't see those highs, you don't see those peaks that, where you can...
It's been stable.
It's stable, it's good, and it's good for the buyers. In fact, if they are seriously looking to buy a home, and if they get a good location, good brand, good developer, it's for them, it's the time to buy, because this party is not going to last forever. Costs are going to go up, and of last 5 years somehow we managed to hold the costs also. Though land price has actually crept up, the labor cost has gone up, the rest of the commodity prices are more or less stable. So that has helped us also to produce a good product and deliver it also in a nice way.
Let me ask you why, Mr. Jaishankar, is land going up? I mean, this has been the toughest. After demonetization, this period has been the toughest. I would assume that landowners are now more rational. They're saying, come, join hands with us. You're a reputed builder, developer. Let's do the work together. Why are land prices still going up? Especially in the last
I can say with all respects to the landowners, they have never been rational.
Okay,
They've always been irrational. Their expectations never cease to come down. And having said that, there is plenty of land available in Bangalore.
Okay.
The question is it the right piece of land, with the right title, at what price, with what infra? These are all the questions, and with whom we are dealing.
Okay.
See, ultimately, like the customer wants to deal with good developers. Developers want to deal with good landowners. So that is how it is. Unfortunately, land prices have not come down. There may be few exceptions, but generally the prices have gone up in quite a few cases. So that way, yes, they should have come down. but unfortunately it has
So
not.
you're saying that low inflation on maybe many inputs, but land still not on your side.
I just want to add a point. See, government is to say government can be the culprit why the land prices go up. Year on year, they increase the guideline value with the intention of raising more stamp duties without considering what the market dynamics are. That is the very unfortunate thing. On the one hand, you want housing to be more affordable. On the other hand, government is party to make it unaffordable.
They want their pound of flesh. Let's not believe any other way. Even in cities where land has become exorbitant, like Mumbai, I don't think the rates at which governments auction their own land ever goes down. I'm going to come to you, sir, Mr. Sharma. Well, land never gets cheaper. Even in a city like Mumbai, where land is so exorbitant, the government does not bring the price down. It wants its pound of flesh as well. But let me come to the other topsy-turvy which the sector has been seeing throughout post-demonetization. But now the curveball is GST, 5% without input credit. Are the buyers now even more confused, on the sidelines? And which side of the table are you on? Do you want that, or do you not want GST without input credit?
We would like to have a GST with input credit. That is the categorical communication we are trying to give, and it is based on logic as well as on the fundamental truth on the basis of which this GST was implemented in India against all odds. It was considered as the most reformative, most progressive tax ever introduced. The logic was that all the intermediaries should be allowed to take the input tax credit, and the ultimate buyer should be allowed.
So whose idea was it? 5% GST without input credit. Did the suggestion come from the industry at all? Anybody?
No? I think there are two stakeholders here. Somewhere optically to the end customer, they believe that when their invoices they find tax rates at 5%, they feel happy, because the price is what the market driven, theoretically speaking. So 5%
psychologically it's a good figure.
18% the way it is being communicated, though everybody is paying 12%, gives them some kind of a mental comfort. And then also, if you feel that wherever the product is sold above say 6,000 or 6,500, some of our developers fraternity, they believe that the land cost being little bit higher, their cost of construction is not good enough for them on a 12% regime to see that they become competitive. Okay. So these are the two reasons, but we believe that GST should be there with input tax.
Right.
To answer your question one,
buyer confusion.
Right. As far as the buyers in our major markets are concerned, we have seen good traction, and right now they are not bothered about 12% versus the 5% from a demand perspective.
All right, buyers not bothered about GST is music to the ears. Having said that, I'm looking at the figures, Ashish Purvankar, and looking at this number. So you had a supply of, in 2018, about 35,000 new units. You had about 57,500 absorption, which is a fantastic story by itself. Unsold inventory still at 73,340. But then again, all of your listed players, when I look at your quarter-on-quarter numbers, sales have been robust, they've been increasing. Where is this 73,340? Because this is the number which gives the sense to people that there might be a chance that prices are likely to come down or could come down a little bit.
I think one is we need to be very clear of what we term as unsold inventory. Unfortunately, fortunately in our industry, the product takes about 4 to 4.5 years to get ready. Do you call a project that has just been launched, apartments that are not sold there, do you put that in the unsold inventory bucket? I think that's wrong way to look at it, because this inventory is there to be sold over a period of 3 to 4 years. What one should be concerned, in my personal opinion, should be concerned with apartments that are completed and are not sold. If you look at that bucket, yes, about 2-3 years ago, that was a large number. Over the last 3 years, we've seen, even personally at Purvankar and Provident, we've seen that number, in fact, go down really fast and significantly.
So ready homes are selling. That's happening all across India and specifically here.
Absolutely. I think if you now look at most of us, you won't see in a single project. Obviously, we have very large portfolios, a large number of projects. But if you look at an individual project and if you see the percentage of unsold inventory, it's almost insignificant, right? So that has picked up in terms of sales over the last 3-4 years. Almost 35 to 40% of our quarterly sales are from our ready-to-move inventory bucket, right? So that's done exceptionally well. Now let's go to the new launches. Even the new launches, if I go back 5 years, we would sell about maybe 10-15% in the first 2 quarters of launch, and the balance sale would actually be spread out over 4 years. Today, I mean, you have 4 listed players here. I think the good news is we are seeing almost 50 to 60% sales within the first 2 to 3 quarters.
Wow.
So we are seeing, and these are not at discounted prices. These are at competitive prices. So, I mean, there's something that's happening. Obviously, there's stable demand. I think the amount of launches have come down. So, you know,
which is good for the market.
Which is good for the market. So our market shares have, in that sense, increased. I would like to think so. But our sales numbers have increased. Individually, if you look at it, our sales numbers have increased.
All right. The other big question that I wanted to ask, and Mr. Razak, I'm coming back to you here. 64% of the launches, if I look at last year, have been in that sweet spot, whether it's for bankers or for builders, which is middle India, which is 40 to 80 lakh rupees, right? I'm just wondering, I mean, what are the margins left in that sort of price bracket? It's an intensely competitive market. Is there any concern that, you know, that particular segment is going to have an oversupply situation, or not really? There's a huge pent-up demand.
Manisha, that's the bottom of the pyramid, actually, I would say, or the belly of the pyramid. And that's where the demand really is. I'm very happy that developers have realized that that's the where the people really require the homes. And now all of us are concentrating on that segment and that segment alone.
CLSS is helping. The government's tom-tomming credit-linked subsidy scheme in a very big way. 40 to 50 lakhs and the square foot area.
They do get that bit of that subsidy. If you are now building 60 square meter homes, we are also getting the 80 IB. So all that is helping. But it's always, I'm glad most of the developers in the country, not only in Bangalore, have realized the sweet spot is in that if you are building now, actually people have realized that is my customer. That is where the market is. Okay, niche market is there. You have your luxury. That's the top of the pyramid. That's right there. But that's where even now today there is stress in that. Now whoever has done luxury, if they've done some serious numbers there, now they are holding inventory there. Now that inventory will get sold slowly because there's nothing new coming up in offer. It's only a question of the people need to complete that. They need to hold on to it and sell it bit by bit. But where the real traction is,
40 to 80 lakhs is selling.
Amazing.
There is absolutely.
Even I would say 80, I would even go up to 1.5.
Okay. So 80 to 1.5 is another 15%. So you're really talking about.
That's about 78%.
Yeah, 78% of your market between 40 lakh rupees to 1.5 crore rupees. Mr. Jaishankar, are you worried about the fact that the pricing power is not coming back? And the reason why I ask is that Bangalore was never an inflated market. It any which way went up 8 to 9% year on year. It was a stable market. It was not hugely investor driven. And now price lines are pretty much flat across last 3 years. And you've said it on record on CNBC that margins are squeezed. We've come down to single digit margins. Now, the question is, how long can you continue to survive on keeping prices flat? You will need pricing power to come back to the industry. When will that happen?
No doubt the prices have to start increasing. And I think the time is now, because last 3 to 4 years with a lot of difficulty and effort, the prices have remained stable. The only positive side of it is the inflation has also been marginal. Maybe currently it could be 2.5–3%, and it has never crossed 5%. That is a positive thing. When prices go up 10%, 12%, the inflation also goes up, will be much higher, maybe 7–8%.
We've been very benign on inflation.
From that angle. So now the market has always been good for the customer for the past 4 years, and they have waited for enough. the fence sitters have to take a call in their own interest, not in developers' interest.
Right.
And Bangalore has always been a very well priced, reasonably priced market. All four of us are listed developers here. If you see the balance sheet of anybody, we're all in single-digit profit margins.
Yeah.
You know, that is not a happy thing to be in. Probably the stock market.
I'm surprised with all the demand that's happening, and there is a real buyer here. Ashish, there are still subvention schemes. I mean, why would you have to do something like that? I, drive down from the airport and everybody is still talking about pay 5% and rest on possession. I mean, that also affects your own cash flows. Buyer money is an important part of your, receivables.
So I think one needs to understand why is someone rolling out a subvention scheme. I think the first instinctive reaction is that, is there a problem? Do we need this to push sales? I will tell you today, in most cases, that is not it's not the case.
Really?
It's not the case, right? It is being done to facilitate the buying more from, so today, various concerns. How long will this project take? What stress my EMI will have on me, etc., etc. So it's basically packaging the product correctly. End of the day, you're still bearing the cost of subvention.
All right. Before I move out from residential to other exciting areas of real estate in Bangalore, and of course, there you have feather in the cap of office space being the best in the country. I'm just going to quickly do a very rapid fire on the best markets according to you and best picks or price range. I mean, would you bet on 40 to 80 lakhs or 80 to 1.5 crores, sir?
I would bet between 40 to 1.5 crores.
40 to 1.5 crores.
Yeah.
And I'm looking at, just the launches. Tumkur Road seems to be right at the top, followed very closely by Whitefield and Yelahanka. Sold units also, Whitefield is number one. I mean, how do you really come to people are still buying? Is this a redundant question because people will just buy where they live, Mr. Sharma, or are they looking at, a pick of any market?
See, as far as Bangalore market is concerned, the Southeast Texas will continue to attract most of the sales. And the outer ring road and in and around that outer ring road will be the key destination.
Is your pick? Ashish?
The same sentiment. I think what's happening is today with the metro and parts of metro being operational, we're also seeing an emergence of suburbs within the Bangalore city which are almost self-contained. So you have office space, you have entertainment, you have residential, you have malls, you have schools,
Thank God.
Everything.
The roads are thanking you.
Right?
The roads of Bangalore will be thanking you.
So today you can meet a resident of Whitefield who will ask you, what is MG Road? He hasn't been on this side of town for the last 3 months. There's no need for him to come on this side of town. So we're seeing the emergence of these suburbs. So you're going to see multiple micro markets within Bangalore city, which is emergence of these suburbs, do exceptionally well. You mentioned about Tumkur. So I believe that will be the new sunrise sort of destination in terms of, there's office space that will come up there. There's already hospitality, there's hospitals, there's schools, colleges. You will see that now market emerge as well.
And also affordable homes. I mean, Tumkur Road is still affordable, right?
And you have the metro connectivity.
What Ashish said, I'd like to re-emphasize is the metro connectivity. See, metro connectivity actually changes the entire demographics. Now, you can connect from one part of the town to the other part without too much of stress, without the roads. So that's again re-emphasizing that public infrastructure, public transport is the key to development.
And key to also finding the right real estate. Your bet, sir?
For location, I think it is the southeast is number one.
Okay.
And becoming north and northeast.
If you say southeast, I'm not a Bangalore person. Please specify the market. I only know Janakpura Road.
As my colleague said, it is Whitefield over our zone. Is a Whitefield zone, I call it
Zone
as Whitefield zone.
From Whitefield to Sarjapur Road
is the number one. And 40 lakhs to 100 lakhs, in my opinion, is
a segment which is going to remain resilient. Yeah. All right, gentlemen, stay with us. When we come back, we take a look at Bangalore's crowning jewel, its office space market, which has been India's best performing and, of course, also getting ready to give the country its very first REIT.